they'll get an opportunity to watch. Thank you again, everyone, for joining. We are going to continue talking about candlestick patterns. We have last week we have talked about the hammer and the shooting star formation, and today we'll also continue in that vein, and we'll be talking about bullish and bearish engulfing candlestick patterns. When my computer won't be sticking, I did get a new mouse. Here we go. Right, so engulfing candlesticks. So what are we defining as engulfing candlesticks? Let's look at the bullish one. So for a candlestick pattern to be considered engulfing, you need two candlesticks. To be bullish, we are going to be looking at a downtrend. So the market is continuously selling, making lower lows, and at some point the candle closes and the next candle at its opening has gapped down. When we talk about gaps, we mean that the opening price of the next candle is greatly different from the closing price of the preceding candle. In this case, it has gapped lower, as you can see right here. So here's the closing of the previous session, and the market opens gapped lower. Now, thinking about this entire downtrend here, the sellers are dominating, they are in control. And as it gaps lower than the opening of the next session, the sellers are going to be continuously saying, okay, yes, we are continuously dominating, we're making more profits. But at this particular level, buyers are entering the market and they're actually pushing the price up. All the way, not only making up, closing the gap, but also making up all the lost session. And for it to be considered an engulfing candlestick, the second candle has to close above the high of the preceding candle. Now, the length of the wicks and the extent of the wicks doesn't matter, right? So this can have long wicks on either end. That one doesn't make a difference. We're looking here only at the body of the candle. So it closes, it opens below, and the price pushes up, indicating that the buyers are here now taking control. And for sellers, this is a crisis point, if you think about it, because up until this point, they have been dominating the market. So what are they to do? Are they going to stick it out? What is their pain level, so to speak? You know, how much loss in profits can they take before they're going to jump out, close their position, and join into the buyers? So when this closes above the previous candle's high is a good indication that we are looking at a trend reversal, which is why this particular candlestick formation is a very strong indicator of a market reversal. So let's look at it at an actual chart. And I want you to look at this daily chart and see if you can find the bullish engulfing candle, just as we talked about. So if you do, go ahead and unmute yourself and let me know. Can anyone see it? It has to gap, it has to open below the previous candle and close above the high of the previous candle. Anyone?
Is it the one above November 28th?
No, that's not yet what we're talking about. November 28th.
Oh yeah, I'm sorry, I didn't see that other candle.
Which one did you see? Which one did you see now? No?
I definitely see one right by what's it called? September.
Right here where my mouse is here now?
More so the one that's to the right. after that impulsive move down there.
Right.
A little further to the right. Yeah, the green impulsive candle that's right in between those two candles, and the red.
All right.
A little bit to the right. A little bit to the right. A little bit to the right. Keep going.
Keep going. Keep going. Keep
That
going.
one.
That
the
one
sexy
here.
one right there. Nope. Nope.
This one.
Yep.
Here.
There it goes. Yep.
Right. Right. Okay. So this one is a strong one. I agree. But
Yep.
we have one before that as well. Right. I can look a little more here. Smack in the middle of September. You're seeing the markets. You see this bearish candle here. Market gaps. Here it opens, and it closes above. This one is also one that I'll be talking about. This one is a stronger indicator, if you think about it, because the market has been going down. It's continuously going down, and it is the lowest point here, right? And then as you can see here, it has a smaller correction, and you're right, it gaps down and closes above. Very strong and kickstart a strong movement up as well. But the initial bearish, bullish candle would be right here, as I've highlighted. And as you can see, it takes close to 5 months for price to return to that same level. And so we have a bearish, a downtrend, continuously making lower lows. And at this point, the bearish and bullish engulfing candle lets us know, okay, that is something is in the coming. Now, are we going to jump in as soon as we see this candle form? No, we want to wait for confirmations, and we'll talk about that a little bit later after we look at the bearish engulfing candlesticks as well. All right, so bearish is the exact same setup, just in reverse. So we're looking at a continuous uptrend. Market is making higher highs throughout, higher highs, higher lows, and between the first candle and the second candle, price gaps up this time. Right? So the price, this new session opens at a higher price than the previous session's close. And here, sellers are entering the market. Up to this point, buyers have been dominating, and here sellers are entering the market and pushing the price below the previous session's low. Right? And it closes. It doesn't matter, again, the wicks, the length of the wicks, if it has any at all, if it's a shaven head, basically a Marabuzo, or if it has a long wicks on either end, that doesn't matter. You're looking at the body of the candle itself. And here it engulfs the preceding candle. This time indicating that we might be looking at a potential trend reversal and starting of a downtrend. Now I've put up a different chart this time. But anyone here that can spot the bearish engulfing candle following the significant uptrend? Again, if you do, go ahead and unmute yourself. Okay. Yes. That one is a huge candle down. I agree, that is a good point. So right here is one. Now, we have seen the market here continuously, a lot of wicks weakening, and this one pushing down a lot. So this is an indicator, if you ever see a large candle like this, that the big players were here, banks, hedge funds, and something moved the market drastically. Yeah, but yes, we have a couple more examples here. One that is, you would argue, a failed bearish engulfing candle, more between end of August, if you can see it. And end of August, we have one here. Market pushes up, and we have a strong candle. Now we don't have a gap here, and that's something we're also going to talk about in a little bit. But really a picture perfect bearish engulfing candle is right there. Market gaps up. It opens above the high of the previous candle, and it makes up all the ground that the sellers have lost over all this time. You see a very strong bullish market up until this point, where it's kind of teetering out. We see a lot of wicks. It's not penetrating, and then having a final push by the bulls, which is rejected by the sellers, as you can see by this strong bearish engulfing candle. And the market then goes into a sell and doesn't actually return for another year to that very same price level. So as you can see, this is yet another very strong indicator of a trend reversal. Now, we don't want to just jump in. Right? It's depending, of course, on your risk appetite and how you define your trade setups. Sure, you can place, in this case, a sell stop a couple pips below the low. That's one way. All you do is you see a bearish engulfing candle, you jump right in, and then you put your stop loss just a few pips above. That is one approach. Another one is that you wait for confirmation. So you wait for another strong bearish candle to confirm that this is indeed going to be a trend reversal. Also, you can do that in conjunction with other setups, structure levels, etc. Now, one thing I want to highlight is if anyone here has had a keen eye and has seen it, the charts I put up, they weren't currency charts. Right? I put up the first one was the DAX strength index, and this one is the SP Plus Core. Reason why I did is because you see a lot more gaps in price in stock market, in the conventional stock markets, because they have their opening and closing the markets, and unlike the Forex market, the Forex market is open 25 hours, 5 days a week. So, and with that tremendous liquidity in the market and the continuous availability and that people can trade, you don't hardly see any gaps in the conventional stock markets. Just about every session on the daily here shows a gap in the opening of the next session. Hence, the traditional bearish engulfing candlestick you will more than likely see here. Now, trading, and particularly technical analysis, is not an exact science. Right? Adjustments have to be made and concessions, and it's very subjective. So when we look at let's see, the actual Forex market, for instance, here, AUD USD, we will define the engulfing candles, any candle that basically pushes and closes above or below. So for a bullish engulfing candle, we're looking at a candle that strongly counters the bearish sentiment and closes well above the previous candle. For instance, on the AUD USD right here, this is the setup from last week Friday. Right? So markets are currently closed, so we don't know what is going to happen, but we see that the market is in a continuous downtrend. And here we see a bullish engulfing candle. There's no gap, okay? But we know that and because of the liquidity and the constant availability of the market, we will likely not see any gaps, especially not in the intraday time frames like the 4 hour or the 1 hour. And therefore, we'll make that concession. We say, okay, a gap is not necessary for it to be defined as an engulfing, as long as, in this case, on the bullish engulfing, it closes well above the preceding candle. Right? So what we would do in this case, like this one. Okay, so let's look for extra confirmation, just to make sure, okay, this is not just in mid-air, a candlestick pattern that just happens to occur. And we don't want to trade anything because name of the game is risk management, right? And capital preservation. So we don't just want to put our money on the line if we don't know for sure this is going to be a good trade setup. So let's see if we are actually forming this pattern on previous structure. And as you can see, this actually looks like we do. Okay? here. Price has come back here several times. Again, structure, resistance, support levels are not just a line, they are rather a zone. So we can consider this still part of the structure. Here's a very nice reversal. You see, ultimately penetrated and continued, got rejected and acted as a support. So here, this area acted as a resistance. So we can say this is indeed a very strong structure level that we come back to. What's up, Donnie?
What's up, bro? Sorry, man, I'm at work.
You're cool, no worries. Right, so as we're looking at this right now, this is in terms of where it formed a very strong indicator. This could be yet another strong rejection of the downtrend at this support level, and it may push higher. Now, today markets will open, and we're not going to just place our buy stop and hope for the best. We wait for Sunday. Sunday, the markets are just going to be all wild and crazy. We wait for the markets to settle. But what would a potential setup look like for us for trade? As I said, when trading candlestick patterns alone, typically when you see a candlestick reversal pattern like this one, you place a stop order, in this case 5 to 10 pips above the high of the bullish engulfing candle, and your stop loss would be 5 to 10 pips below. So and your target level depends on you how many pips you want to ultimately get out of your trade. Right? You can either define it by pips, or you set your first target to, let's say, the first structure level. So if you were to do that, let's say about, okay, what's the high of this candle? The high is 0.75666, so 0.7 right here. That's where we would enter the market roughly. Low is 0.75382, so I'd say 10 pips to be on the safe side, right, give or take here. So even just without doing anything, we see the engulfing pattern, we can potentially set up a trade, look for this structure level as our first trade profit, and we would have a favorable trade setup, right? Again, however you define your risk-reward ratio for it to be a good trade, if you want it to be at least 1-to-1 or 1-to-2, that's what you would have to look for before entering a market. And again, we want to look for further confirmation, which is why one of the confirmation would be for price to push up higher, and that's why we place a buy stop above the high of this bullish engulfing candle. That'll be one. Again, don't do it now. Don't do it as soon as the market's open. Wait for them to settle. Wait for the market to tell you what it's going to do, and then follow your trade plan from there. But let's look and see if you can find any other engulfing candlestick patterns here. All right, here's a good one. This is a beautiful one, right here. As you can see, this is a really nice one. One, we have market pushing up, right? We're forming higher highs. And yet again, we don't have that gap, but we have a strong bullish candle followed by an even stronger bearish candle, making up all the losses, basically, that the sellers have occurred until then, and indicating that we might be looking at a trend reversal. Another good indication here is if you look at the wick of the bearish engulfing candle, look where it ends, right here, structure level, right? So yet again, this was a rejection, a resistance level first time, market came back and tried again and got rejected again, effectively forming a double top here. Again, further So, further showing that there is a strong indication that we are looking at a trend reversal here. A question here was whether or not I would rather trade engulfing candlesticks which has gaps. Personally, it is, to me, that's just an extra confirmation of the strength of the pattern. Because of the nature of our trades, I personally trade long term, and so my time frame that I do most of my analysis on is the daily. So I would likely see gaps. They are be more likely to see them there than on, say, the 4-hour or the 1-hour time frames, the other trades. So yes, that would just be an additional indicator or a confirmation for me. But I would not disregard a pattern just because in this case, because it doesn't gap. Okay? So even if we waited to enter here 10 pips below, would still catch a very nice bearish trend here. So let's, again, so we have initial confirmation, say, okay, looking at structure level. Even if we were to, let's say, the low here is 0.79856. That is good. Now, because of the long wick, this is, of course, a very steep stop loss, right? So you have to be comfortable with placing your stops. You don't want to just enter any trade. Again, it's very important that you define your trade entries before you actually enter any exits, so that way you make sure that you don't just gamble, but you preserve your capital to the best of your abilities, right? And of course, you want to have ideally at least a 1-to-1. Looking at next structure level, this is another strong structure level, so that's where I would put my TP, right? My first. Now, you can just do take profit and exit the trade, or you can do a trailing stop loss. So after, say, 50 pips, you put it to break even, have basically a free trade, and then let everything trade right out from that point on, right? So, but that would be one way of entering the market using a bearish engulfing candlestick pattern here. Let me see. So yeah, so in my case, I wouldn't watch the hourly. So the question is if I would watch the hourly or the 4-hour to determine entry points. No, typically I wouldn't watch on the hourly because my time frame in which I analyze the market is on the daily. So I would go down only one time frame into the 4-hourly to look for better entries. It's, in this case, again, depends on how you define your entering. So if you're using candlestick patterns solely to give you a warning, a heads up, oh, something is happening in the market, I better pay attention and see if I can get into this trade. Yes, then you just go down lower and into your lower time frame and execute on that level. If all you need is for candlestick pattern to occur and you just place your buy stop right away, and that is how you trade, then you don't have to actually go down into the lower time frames. You stay within your time frame that you analyze the market in. Okay. Let's see. Any other questions while I look for another potential engulfing candlestick pattern here? Right, this one could still count. Right? We have markets trending down, even if it's initially just a retracement of what seems to be a bullish impulse, but it's still forming a lower low. Here we have some indecision and it's going back and forth, and up on this candlestick formation, I'd say, okay, this is a strong indicator that I'm going to have a buying opportunity. So again, I would just place a buy stop a couple pips above, and make my first target, possibly, depending. Let's see what the risk would be in this case. Yeah, so that's something that I could take, for instance. That would not be a bad setup. Right, and Caribbean Blue has also identified some nice harmonic patterns. So that's something that going to be part of our series later on for more advanced classes. But candlestick patterns can be incorporated in your harmonic trading plan, right? So you see a harmonic pattern develop. Those of you who are already aware of those, cipher patterns, path patterns. If not, if you have missed last week's session, go back on YouTube, Caribbean Blue FXTT. There, our very own Donnie is talking about the back pattern, and he's going to continue about the other patterns as well. So definitely make sure that you are here every Sunday to get more of the information that we're sharing with you guys. Right? But absolutely, so candlesticks can also be incorporated into harmonic pattern, and basically any form of trading. Right? And whatever it is, candlestick patterns are not to be discounted, because that is pure price action that you're using. Everything else is based on price action. So don't be fooled just because indicators is not everything that is made up to be. Indicators are basically algorithms based on your candlesticks. So always a good idea to keep those in mind and to incorporate them into your trading style. Here is another one that, while not as strong because it doesn't actually close above the high of the previous candle, it does show that we are looking at a potential reversal as well. Okay. Let's see if we can look at your bounds, see if we can, the daily. Okay. I'd always be careful when you see large candles like these. Definitely don't ever jump on those just because you see the market move and you feel, oh my gosh, I'm missing out. The Forex market has so much volatility and liquidity. There's always money to be made the next day, and much faster that you can lose money if you jump on a trade like that. Here we look looking at one that I wouldn't say necessarily failed candlestick, but if you had just followed the simple trade setup that I said, let me highlight it for you, you would probably have been stopped out at the end of the day. Right? So this one here is beautiful, a gap down, a huge gap, and it closed it immediately, and it closed above. And the moment we would have basically entered based on buy stop, we would have been in drawdown all the way and would have been stopped out. So again, these are definitely no trade setup is foolproof. It's 100%. So market does what it does, and we're just trying to ride the wave. So keep that in mind every time. But certain setups, just like these engulfing candlestick patterns, will give you an increased chance to come out profitable. Here's a nice one. So this right here, a nice, okay. Right. Market has been trending down significantly. We have a hammer forming, and that's followed by a bullish engulfing candlestick, right, indicating that we're looking at a trend reversal. And again, depending on what your risk appetite is and where you want to set your targets, I would have set my targets on the first structure level just below. 1.5 risk rewards is not too bad, and we would have hit it about a month and a half later. So the that's our session for today. We look. If you want to incorporate into your training style, I highly recommend that all you do is you just scroll through a chart and try to train your eyes on those. Right? The more often you do, and the more you train, you take the time to test those trade setups, the more they just pop out to you, and you'll see them more and more often, and they'll give you an enhanced opportunity to be a profitable trader. Any questions, guys? And please feel free to unmute yourself if you do, or type into chat. All right. Well, if there are no more questions, thank you very much for coming out. Appreciate your attendance, and hoping to see you next week. Enjoy the rest of the Sunday, and let's get ready for market opening.